Hello, everyone. We're back at it with spicy takes and tax breaks, where we turn the IRS rulebook into your personal wealth strategy manual. I'm your host, Aubree Denekamp, owner of AV Accounting and the Right Off Clean brand. And today we're talking about one of my favorite tax strategies, which is payroll, whether that is for yourself, adding employees, or your children. It's equal parts genius and overlooked by so many people. Paying yourself is so crucial to how you build your business and scale your own growth. So today, joining me is one of my favorite brains of the business and tax strategy, Stephen Harris. He is a serial entrepreneur, business strategist, and the guy who someone makes compliance easy.
Hi, how are you? Thanks for having me on.
Yeah, welcome.
We were the first franchise outside of Fort Collins, which is where Journey started. But I've been in the payroll industry over 18 years, as wild as that seems to me.
How did you get started in that?
Well, interesting because you don't really go to school for payroll. You know, it's one of those things that you end up just falling into. I grew up in an entrepreneurial family. My father wrote a payroll tax software. Imagine trying to develop software with no internet. He started this in the early 90s.
I can't imagine that.
Obviously one of the smartest guys I know, and I'm biased thinking that he's probably borderline genius, but to be able to pull that off is pretty incredible. And I watched him growing up, and my mom was involved, and I always knew I had the entrepreneurial spirit in me. I always knew I was going to do something. I didn't think it was going to be payroll. Actually, I didn't think I was going to get involved with the family business. But, you know, at the time in college, I was working at an architectural firm, and he had asked, hey, do you want to come join my team and sell payroll tax software? It was called Master Tax. And I'm like, that sounds horrible. I don't want to do that at all. Being that stubborn son, if you will. But, you know, I didn't want the stigma of being the boss's son kind of coming in. But then I realized, you know, hey, this is a sales opportunity for me. It gets me in the door and allows me to kind of build my resume, and then I can move on to something else if I want to. But I never really left. He sold the company to ADP 2 years after I started. I remember when I first started, I was like, again, I don't want to be the boss's son and just come in here and not pull my weight around. So I literally was a sponge. I learned everything and anything I possibly could, asked everyone in the team questions, and was like, tell me everything I got to know. And ended up doing pretty well my first couple of years in sales. And then ADP bought the company, and then I kind of, blew it out of the water there, went to a few president's clubs and did some fun things with them. But again, I couldn't be a corporate lifer forever. So that's when I met the guys out in Fort Collins, 2015-16 timeframe. And then we partnered up to launch Journey Payroll here in Phoenix back in 2017. So coming up on 8-9 years now.
That's incredible. Have you, I'm sure, experienced every bump in the road along the way? Any big ones for the people just starting out on that journey, especially as a franchisee?
You know, it's funny because you would think, like, being in payroll, I would know exactly like how to operate payroll internally for my own team. Yeah, I know the tax compliance and the payroll compliance and whatnot, but I think the bumps are just scaling with a team, trying to get buy-in from the organization to, you know, everyone moving in the same direction. They understand where we're going, the vision that we have, and the things that we want to do. And you know, sometimes not everyone's on the same page. And so we've gone through our fair share of a turnover, and, you know, when you hire staff and then, you know, they don't work out, and that just causes some bumps in the road. It's like, okay, well, I got to find someone new. I'm super grateful now, as I can say, we've got great tenure at this point, 8-9 years in. We've really developed a team to where it's a really well-oiled machine. But in the beginning, it was hard, you know, going who's going to work, who's not. And especially when you're a small business, right?
Yeah.
I mean, when you're a small business owner, you've only got a couple of people on the team, and some new hire walks into the office. You're like, wait, this is it? This is what this is the office
company? Yeah.
Yeah. Where's the massage therapist, and where's the cafe, and where's the, you know, all the
gym.
perks and all the, yeah, exactly. Where's the gym? So that is probably the most challenging thing, is you really just have to find good people that understand what you're trying to do, where you're going, and they want to be on that ship, and they just really want to grow with you.
Yeah, absolutely. And for you, did you start off on payroll yourself when you started into Journey, or was that something that came later down the line?
Yeah, that came later down the line. So as a new business owner, obviously, you know, you and I know this, but the listeners may not. As an owner, you don't want to go on payroll until you're profitable. And it took us a couple of years to get some profitability. I mean, it's small business payroll. I remember when we first started, July 2017, we left ADP, but it was from scratch. There was no clients. We weren't even selling small business payroll. I was selling payroll tax software to companies, you know,
yeah,
so
wow,
to Fortune 500 type companies. So
How
yeah,
did
we
you
had no
start getting
clients.
those clients? How did that traction begin?
A lot of networking. So I think 2 weeks after we launched, my business partner, Jamie, she got into a BNI group.
And
Then a
how you
year
and I met?
later, I got into a BNI group. And then, yeah, we met and I got you into my groups.
Huh,
BNI is a huge thing for small businesses, as you know, just getting the word out. And, it really drives that relationship building and people, learn to trust you and want to work with you when you're having that consistency of the BNI chapter, the meetings every single week.
absolutely. And the connections you make within too, having those people who are mentors and also the people who you kind of see go off the rails in a different way. It's perspective, which is great to gain as you go through with it. It's not just yourself.
Correct. Yeah. And I think if one of the things I've learned in BNI in general, I've been on leadership of our chapter, as you know, for this is my third year in the last 8 years. And it's just you put in the work, you put in the longevity, and you trust the process. It does not happen overnight. And I see so many new members coming in and they're like, I didn't really get anything in 4 months, so I'm going to bail. And it just doesn't work that way. And I think that's how it works in life in general. There is no overnight success. Like it's just the discipline and consistency and the grind and the grit that you have to just continue the pursuit when you know you're on the right path. And so I think just with networking and growing your business, it's that same way. I mean, if we thought we're a year into our business, we ripped up our pre-launch forecast pretty quickly. So when reality hit, if we would have quit, we would have, we wouldn't be here today. So I think that's part of it is you just know that there is no plan B. You know what you've got, your work ethic, and you're going to have to make some sacrifices as you grow. I mean, it took us, I think the first 6 months, I think it took us to even get to 25 clients. And then from that point forward, we've been able to scale exponentially, and organically year over year over year. Now we're running over 800 clients or so Arizona based, which is fantastic.
It is fantastic. And you guys do just not in Arizona also, correct? You do other states too, or is it just your local?
Yeah, nationwide. We have clients all across the country. What we do focus on is Arizona-based partners, right? So CPAs, bookkeepers, health brokers, that's another way that we were able to grow outside of our own networking and marketing efforts is we look for those partnerships, those power partners, those that are working with small businesses and the clients that we serve that are also doing it, but they're doing it with services that we don't provide, like accounting and health insurance and financial advising and things like that. A lot of
Absolutely.
those areas are tied to payroll. And so we want to be a great power partner for those partners. So that way they can feel good and look good with their clients when they refer us a client. So we've been able to develop some pretty strong relationships here in the Phoenix area.
Yeah, which is incredible. And that's a huge part of the reason we work with you solely is because you guys make it easier. So when there is an adjustment that needs to be made with one of our clients or a change in payroll salary, those are easy things that we have to do. And we don't have to chase you guys forever. So on both ends, working with people that you trust is great. We'll circle back though. I want to touch more on why did you not just start a payroll salary for yourself when you first opened Journey?
Yeah. So when you first start a business, you're an LLC typically. We're going to start out as a limited liability company. And when you're not profitable, it's just a partnership or a sole proprietorship. So I have a partner. So we are a partnership. And you just take, if you need cash or whatever out of the business, you take draws or distributions, but it's not, if you're not profitable, there's no taxes. It just is a pass through to your personal income tax return. And so if you take a loss, you're going to take a loss when you file the taxes on your W-2 and when you file your personal tax return. But once you become profitable, that's when you take a wage or a reasonable salary or a payroll, as most people understand it, when you have taxes deducted and things like that. There's no reason to set yourself up with a salary or payroll if you're not profitable enough, because now you're essentially just double taxing yourself. You're paying a payroll tax plus if you have any little bit of profits or anything, you're going to have taxes when you file your personal tax return. So we were advised very early on. I did not know this, by the way. We talked to a CPA who he was a family friend who set us up and got us going. And he's like, don't take payroll. And once you're profitable enough, then we'll make the S Corp tax election. And then that's when we'll figure out what your reasonable salary will be as business owners. So it was a little foreign to us to not know how we were even going to get paid. And it's confusing at times, but that's why you have a trusted accounting team and why you're so great for our clients at AV Account. We have a lot of people that come to us and like, hey, what should I do? I'm like, hey, we're not the experts in that. Let's talk to a CPA
Yeah,
and then we'll help you with the payroll processing if it makes sense.
absolutely.
I had a client, just a real quick story. We had a new client, Solopreneur, and she came to us and she said, hey, I've been with this large national 3-letter acronym payroll company. And I've been running payroll and I just started my business this year and I'd like to switch to you guys. And I said, that's great. We'd love to help you out. And I asked her, you just started your business this year? And she goes, yeah. And I go, well, hey, look, I'm not a CPA. I'm not an accountant. I'm not a financial advisor. I don't want to look at your financials or anything, but can I just ask you, are you profitable in your business yet? She's like, no, I've only got like 3 clients. Like I'm just getting going. And I go, well, why are you on payroll? And she said, well, the rep told me to sign up so I could pay myself. And come to find out, she was not profitable. She was not even set up as an S Corp election with the IRS, and she was running payroll. And so I had advised her, I said, hey, you know what? Go back to that payroll company, tell them you want to reverse all your wages, have them amend all your tax returns so you can get those taxes back. You should not be on payroll. When you're profitable enough, give us a call, and then we can set up your reasonable salary and process that through, because that's, when that'll make sense. And sure enough, a year later, she came back. She goes, hey, my CPA says I should now be set up as an S Corp, and we've done that, and I'd like you to run our payroll. Thank you so much for the advice you gave me last year. So we do provide a lot of that consulting, but there's so many times where you just don't know what you don't know, and you kind of get put into a position to do something you're not sure of.
You do. And that's to a great point. Like the other thing I run into a lot with my clients is they don't understand how to pay themselves outside of payroll. They've always been a W-2. So they legally think that the money that's in their business is their business and staying there. But truly, as an LLC, I mean, it's the same thing as you said, it's a pass through. But you can write yourself a check, you can transfer money, you can do it in any of those ways. And I think people are understanding that, and they do. They look to Google a lot of times or ChatGPT, which is incredible for a lot of things, but sometimes it doesn't fit with your scenario specifically. But yeah, S Corp is one of my favorite moves, but not without consistency of, like, I'd say 35 to 55,000, depending on what you're looking at in profit. Because once you run that payroll, being double taxed as both the employer and the employee, it adds up. So talk $40,000. What are you looking at? Probably 6,000, 6,500. And then you have payroll processing fees and setup for, your different UI numbers and things. So it's that balance there. So with 15.3% savings is huge, but for that profitability. So all set.
Yeah, exactly. And a lot of those solopreneurs and those ones that are just getting going, and not even solopreneurs, you could have staff too, but we're going to run a reasonable salary as a cashless only or taxes only payroll. So you don't have to have like all the cash right then and there to pay yourself. We can just record a $50,000 W-2, calculate what the taxes would be on that, and then deduct the taxes paying to the IRS and state agencies, but everything else remains in your business. So you still get the $50,000 deduction as a salary expense, but you've been taking draws and distributions or whatever throughout the year. We're just going to recategorize a portion to what that reasonable salary should be, and then you're good to go. You're golden. You can do this quarterly. You can do this monthly. You can kind of build a little tax payment plan out for yourself, but you don't have to be traditional payroll biweekly with your staff. And it's definitely not the amount of all of your profits. It's talk to AV Accounting, talk to you, Aubree, and figure out what that reasonable salary should be, because you don't want to be setting yourself up. If you're profiting $100,000, you don't want to do a $100,000 salary.
Yeah, absolutely. Because you lose the whole advantage. That's great. So in the consulting, right, do you guys consult on other things? So say you are a solopreneur or you become an S Corp. At that point, you're hiring employees. What does that look like? Who do you reach out to? Is that something you guys help?
Yeah, I mean, not necessarily like as a service. We're not going to be full blown HR, having someone coming in and like educating culture or anything like that. But we certainly have all the tools and resources. We do offer HR experts on demand. So if you have some questions or need some help with job descriptions or handbooks, things like that, we do offer that as a service. We also offer a bunch of tools where paperless new hire onboarding. So gone are the days of handing your new hire a manila folder with the federal and state forms, and you're filling it out by paper, right? We all remember from college and high school and our first jobs, and we had to fill all that stuff out.
Yep.
And so it's a lot of work for the employee. It's, a little outdated, and then the admin has to take that paperwork and plug it all into the system or whatever. Well, now you can just do it all electronically. You can literally send them an email link. They click the link, fill out all their information online, and essentially set themselves up for payroll. So streamlining that onboarding experience and working with somebody who has those tools makes you look really, really professional and nice for a new hire. Really, that's the first impression of your business with that new hire. A lot of times you're doing this process even before they're starting, right? You want to start this onboarding process before their first day. And so they're getting a glimpse of how you operate and the kind of, things that you take seriously and the professionalism that you have through that onboarding experience.
Absolutely. And that's a big part people miss. People be like, oh, I didn't realize I needed to have a W-4 for them, or even like they don't know those things? Do you guys put that in place and walk them through that, or is that just part of the onboarding process to begin with?
Yeah, it's part of the onboarding process. So it's going to have all the mandated forms. So your federal I-9, which is your employment eligibility form, your federal tax form, which is the W-4, and then your state form. So in Arizona, it's the A-4, your tax withholdings. And then they choose their payment method, whether they want a paper check or direct deposit to fill out all their banking. But what's cool is if you have a handbook or you have a job description or you have any other company policies or documents that you want to upload electronically and have them acknowledge those types of things before they start their first day. Maybe it's a drug screen type policy you want them to acknowledge that gives you authorization to do this, right? So you can upload all those things electronically and allow them to go through that process. So we do guide them on how to best use our system. Most payroll companies now are going to have a pretty slick onboarding platform. It's usually if you're going to try and do payroll yourself, that's when it's like, okay, what do I do? How do I do this? What are the questions I have? So I always say I'm an advocate for entrepreneurship. I love small business. But the best thing you can do for your business is outsource the stuff you don't know how to do. And if you're an HVAC tech, I guarantee you don't know how to do bookkeeping, accounting, payroll, things like that. Outsource those functions of your business so you can work on scaling your business.
Absolutely. So I get this actually more than I would like to, but a lot of people think that they can just pay their employees without having W-2 set up. Whether that is, I've seen it both ways, whether they withhold no taxes or they're withholding taxes and not sending it to any sort of agency. What are the consequences by doing something that way, and kind of how do you dig yourself out of that for anyone listening who's maybe there themselves?
Oh, that's probably the number one like mistake we see, or number one thing we see is, oh, I'll just 1099 them. It's cheaper for me to just 1099 somebody. While we can process 1099s, we do want them to be legitimate 1099s. At the end of the day, you're the employer and you're responsible for that. But there is like a little IRS quiz, or there's you can go on the irs.gov website and search, how do I know 1099 versus W-2? There is, there's rules around that. Like, can you manage them? Are you providing a uniform? Are you providing equipment? Maybe the trucks, things like that. They're probably more like a W-2, but there also are times when maybe they really are 1099. Maybe it's outside sales and you have no management whatsoever, and they're just sending you referrals or bringing in business that they can just do what they want. Maybe that's 1099. And typically a 1099 person is going to be project-based work, a vendor, a service provider. If they're using their social to fill out the W-9, which is the 1099 form, that could be a red flag. If they're using the EIN for their business, their LLC, then that's probably legitimate. So classifying employees is super important. When you misclassify them, here's what happens is, you may think small business auditing is probably slim, may not get in trouble. While probably true, there's a lot of small businesses out there. The chances of getting audited, what's going to happen is if you let someone go and they're a disgruntled employee, but you are 1099ing them and they go to the Department of Labor or Arizona Department of Economic Security and apply for unemployment benefits. Well, now the department's going to say, you are never W-2, you're not eligible for any unemployment benefits. And they're going to say, well, no, I was an employee. That's when things start snowballing in a negative way for the employer. If that employee felt that they should have been W-2. And so that will cause, then you're talking about back taxes and misclassification penalties and things like that. So it can be scary. Department of Labor doesn't like you just 1099 people to save on taxes. Yeah, it's like paying $1,000 and it's that contractor's responsibility to file taxes. They are technically a self-employed individual at that point. But the benefits of W-2, you can get far more creative, and it's so much more beneficial when trying to scale your business because you got control. You're providing benefits such as health insurance. Maybe you set up 401ks and matches. You're splitting that payroll tax bill. Half of it's deducted from the employee. The other half you're paying for. So the full bill is not on them when it comes to payroll taxes. And then you're just building a culture and a vision, and you're kind of building out that team as a W-2 employee. So yeah, that's the number one thing. Yeah, but I just want to save money, so I'm just going to 1099 them, and it's the worst. Sometimes you see that, and you're like, you want to help, and sometimes we're not the Department of Labor. We're gonna educate, and we're gonna provide, we're gonna say what the compliance rules are and things like that. But at the end of the day, it's the employer's responsibility to make sure they know what they're doing.
Yeah, absolutely. And with that too, you kind of touched on it at the beginning, getting a W-9 and issuing that 1099. Well, whether you're seeing a social or the EIN, you're also supposed to have workers' comp in many scenarios as well. So what does that look like? Is
Right,
that something you guys help with? How does that work?
So we would help the employer who is employing W-2s with workers' comp. So every
Hmm.
business has to have workers' comp.
Yep.
And a lot of times, even if you're, it's just one employee, you have to have workers' comp. And so if you're hiring only contractors, then it's the contractor's responsibility to have their own workers' comp on themselves. You as the employer, not necessarily have to. Now, there are cases where you should, depending on the industries that you're in, but we would help our clients with W-2 employees get set up with workers' comp. We wouldn't necessarily get involved with their 1099s that they're processing unless that specific 1099 is also a client of ours, then obviously we would discuss that. It's one of those ancillary type of products that we would offer outside of payroll. It integrates with payroll. It's all based on payroll. Workers' comp is based on the premiums are calculated off of wages. And so we have a pretty neat solution there that helps streamline that process for clients.
Yeah, and that's actually one of the biggest ways that I'll see contractors after the first or second year end up being in that position where they've had to get workers' comp. They only have 1099 contractors, but they have to provide Form 941s or they have to provide these COIs, and they're not able to. And at that point, we have to really look at kind of other strategies. So it's definitely better to get ahead when you can because penalties and the actual fines are much less when you're just paying them as you go. So
Yep.
I feel the same on all of that too.
What would you
What
say is the most typical industry that clients of yours are paying 1099s more than W-2?
Definitely the trades. So service trades, I'd say a lot of electricians, landscaping companies, a lot of plumbing companies. It's one of the biggest ones where, yes, you are driving my vehicle, you are wearing my uniform and adhering to my schedule, but you also pick up side jobs on your own. So a lot of people believe that negates things. The Department of Labor would not agree that that fully negates it, but a lot of people run on that until someone tells them otherwise or someone comes knocking. But that is for me one of the bigger ones that I see. I think part of that, though, too, realistically, is part of the retention. People are
Mhm.
turning people over so quickly, and it's a lot to have everyone established as a W-2 and within a couple months them not be there anymore and rehiring. So I feel like that's a big complaint, too, that I get of why people choose to go that way. But I mean, there's so many different strategies around that if you wanted to get into that, too. But even like putting together a probationary period where maybe for 90 days they are a 1099 and then they get eligibility, or having different things within your operating agreement or in employee contracts, how that looks tailored to your business. I don't know if you want to expand on that at all.
Yeah, I mean, if you bring someone on, test them out, and you're not setting their schedule, you're just saying, hey, I just want to see how you operate, maybe shadow us a little bit, and then you're off on your own to, I'll come up with a job, and it's your responsibility to get it done by this certain date. I think that's fine. And then if you're like, hey, I really like this person, and I want to keep that retention, I want to keep this person engaged, that's when you probably want to think about hiring them full time, and then you're splitting the benefits. You're offering more retention type of benefits in terms of what we discussed earlier, health insurance, 401k, all sorts of things like that. But also like, team events and other things that you may want to include and build that camaraderie around. A contractor really is just, it's like a vendor relationship. They can come and go whenever they want. They can cancel that. I mean, just like an employee could also do that, but it's a little bit stickier when you have a W-2 employee. It is something that you want to watch out for and just really
Or
that
a
you're
commitment.
classifying yeah, exactly. And just making sure you're classifying them correctly is the biggest key.
Yeah, absolutely. Okay, so if you want to get on payroll, how do you even do that? Do you have to like get any sort of license? Do you have to get a UI number? Do you have to register anywhere? What does that process look like?
Yeah, great question. So every state has its own rules. But every state has its own tax agencies, withholding and unemployment. Even if you're a solopreneur, you still have to file for an unemployment tax ID, and pay into unemployment benefits. There are a handful of states that will allow you to just go exempt, if you're owner only. But when you start hiring staff or start setting yourself up for payroll, especially even if you're not on payroll yourself, but you hire your first employee, you have to get your state tax IDs. So for instance, Arizona, you would get registered online, aztaxes.gov. It's pretty simple. Go through the process. It's a joint application. And then Department of Revenue will supply a confirmation that you've registered for withholding, and then they'll send it over to Department of Economic Security to register for unemployment tax ID. And then the new business rate in Arizona is 2%, and that's on the first 8,000 in wages. So call it $160 in taxes per year per employee for Arizona. And then you have federal unemployment, which is 0.6%, a minimal amount, 40, and that's only on the first 7,000 in wages. So it's $42. So you're looking at like $202 per employee per year if you hire staff in Arizona for unemployment taxes. Now, If you have a lot of turnover or you have a claim or something where employees file for unemployment later, those rates are adjustable. Every single year they change. Arizona will send them out like by the end of December each year for what the new year rate's going to be. And we've seen some as small as like 0.04% because there's just no turnover and no claims or anything like that. But we've also seen some as high as 14%, and it gets a little nutty.
Wow.
So
Yeah.
it just depends on the business, the industry, and kind of how they're handling their staff and who's claiming unemployment benefits or not.
Okay. That's a really good explanation there on that. What about benefits? If I am a solopreneur, I started my business, I'm an S Corp now, can I now enroll in health benefits just myself? Or how does that work? Do I have to have employees? Do you know? Do you guys process
So
any of that?
yeah, I know enough to be dangerous. I know enough brokers and how obviously we've operated too. Typically, you do have to have staff. I think it's like 5 employees enrolled to set up a group plan, an employer sponsored plan. You can get away. I want to say like Blue Cross Blue Shield maybe
I
will
think
allow
some of the
smaller
options for
groups.
two, I think you can do
Yeah,
as long as it's not husband, wife. I think right now it changes all the time too, but I believe
right.
right now you can do certain plans with yourself and one employee as long as they're not a spouse or family member, is my understanding right now. Obviously, I defer all of that to a broker too. But
Yeah.
do you guys have, obviously, you work with tons of brokers. How does that work in payroll? Do they pay you guys directly for that? Who handles that?
So if a client uses a health broker, they want health insurance, they work with the broker directly. So we're
Okay.
not insurance brokers, we're not creating the plans, we're not going through that strategy session with them. Once a client says, "Hey, we've enrolled in health insurance for our team," they're going through open enrollment, they're going to set up their individual family plan, whatever, and then that broker or the client, if it's a partner of ours, then we'll typically work with the partner directly on behalf of the client. But if we don't know who that partner is, that broker is, and the client will provide us the enrollment summaries. And so those
Okay.
enrollment summaries will have the deduction amounts. And we take those deduction amounts. Usually they're divided up on a per payroll basis. And so like every payroll, you'll have $100 deducted from an employee's check. And that essentially is the employee reimbursing the business for the premium. So the business signs up for the health insurance plan. Let's say they've got 5 people enrolled. It's going to cost them $5,000 a month or whatever it is. The employer pays the bill every month, but then the employee pay for 50% of that. So the health insurance for medical purposes, the employer has to cover at least 50%. The other 50% can be deducted from the employee's check, but the employee gets a pre-tax benefit for that. So if they're paid $1,000 in gross wages and they're deducting $50 a check or $100 a check, well, now if it's deducted $100 a check, $900 of their wages is taxable income. The other 100 isn't because it's a pre-tax deduction. And then for dental and vision can also be deducted from the check if the employer says, "Hey, reimburse me for your portion." And so that essentially that money stays in the business account, doesn't get paid to the employee in their net pay. And that's how the reimbursement happens. But long story short, we do have integrations. So if clients are using a platform called Employee Navigator, they can go through open enrollment electronically. And then we sync it with our payroll system. So when those employees have a life event or go through open enrollment, it automatically updates the deduction information in payroll. Whenever a client hires a new person, it sends the census data back to the enrollment platform. And so it's a nice 360 integration without much admin work between the broker, us, or the client. The employee can just go in and make any adjustments or do whatever they need, and it'll automatically update for that next payroll.
That's incredible. And one of the fun things here that I see some of my clients do is they'll set people up on different structures. So say, for me, health insurance is really important. I provide it for my daughter and myself. And so for a company, if they were like, "Hey, we're going to cover 100% of your insurance," that would be a benefit to me. It's not taxable income on my end. There's different things I can do with that. Plus, it's also a bigger write-off for the company because they're not paying my tax bill, but also able to utilize that different ways.
Yeah.
So with that said, like there is anonymity levels there of who can do what, but you can do different structures. So you can have just general employees, but you can have people who are officers of your company, which could be a spouse or a child that can have that 100% deduction without necessarily offering that to everyone. But it can be something if you're trying to hire people who are trying to stay within certain tax brackets for different reasons, it's something you can play with, which is great. I don't think as many people do that as I think should.
Yeah, you can absolutely set up carve outs for managers or officers or however you want to structure that. we've been blessed to be able to offer 100% company paid benefits to our entire staff since day one.
That's
Um,
incredible.
that
Yeah.
was that was something we wanted to just budget for and just do. And so the only reason one of our team members would pay for health insurance is for any dependent coverage. So we cover the employee 100%, but if they have
Okay.
a child or a spouse, whatever, they would just pay the difference of whatever that dependent would be. But that's like an added $6,000 a year benefit to our staff that they don't have to cover.
Which
And
is huge. And a lot of
right,
times it's even more expensive if they were to just do it independently to begin with, which is a huge
absolutely.
swing when you add that on top of it. So,
And that kind of goes back to why you want to bring someone in as a W-2 versus 1099, because you can't offer health insurance for 1099. If you have a key player that you want to keep and you want to budget to pay for their health insurance as well, put it in their entire comp package, then they're going to be a little bit more accountable and loyal to your business and the growth that you're looking for.
yeah, absolutely. What about also then retirement accounts? I'm assuming that profit sharing, any of those things could be added as deductions or additional pay on someone's paycheck, or how you guys track that.
Again, we're not financial advisors. We do integrate and partner with financial advisors. 401ks are great. Roths are great as well, pre-tax or traditional or a Roth plan, which is after tax. Employees can contribute to the plan. Employers can set up whatever they want for their employer match, whether they do one or not. It's up to the financial advisor and how they do that. But it's set up through payroll. So again, it would be a pre-tax if it's a traditional 401k plan, pre-tax deduction for federal and state only. It's not pre-tax for Social Security, Medicare. But they do get some box one wages benefit there where it lowers their taxable income on the personal level. And then if there's an employer match of say 4 or 5%, you want to try and, if you can, contribute as much as you can to at least get the max in the match, because it's free money. The employer is obviously paying that into your retirement account, but the benefit for the employer is just another added expense and another retention piece, another benefit that you can add for good key employees. Now, we have seen clients that don't have an employer-sponsored plan, but they have employees who have their own individual retirement accounts, otherwise known as an IRA, and they'll have a Roth IRA. And as long as you have earned income, you can contribute to the Roth or a traditional IRA, and the employer doesn't have to be involved with that at all, but you can take a deduction from your wages and have those monies transferred to your own individual account. Obviously, if it's employer sponsored, employees can contribute a heck of a lot more than on an individual level. I think it's 7,000 or so is the IRA limit.
Yep. 7,000 for 25.
Yeah.
Whereas 23,000. Yep. And then you have catch up limits too, depending on where you're at age wise and how close to retirement.
Yep. Yes. If you're over 50, you catch up 7,500 more. So you could do a full 31,000 contribution. And then you can also, depending on your wages, you can set up an employer match. So if you're the owner of your business and you max out your retirement contributions and you're over 50, you do 31,000, and then you set up the employer match, which is 25% of your wages. I mean, you can do a max of, I think it's a total of 58,000 or something combined between the employer. Yeah, so you could do another 50K potentially that the business matches, as long as your salary warrants, call it $200,000 warrants it.
Yeah, absolutely. And one of the mistakes, though, I do see here quite a bit is that a lot of people who are solopreneurs, but and as if they pay themselves salary, they don't have these things set up outside of just themselves in a self-funded 401k program, SEP IRAs, any of that. And they're never then recorded at the end of the year when they're truing out their payroll. So on a tax return, that stuff is going to flag as an audit because it's not matching. So you have revenue sources coming in for your transcripts. And a lot of people are not adding that in. So a lot of people will use a system that they typically go in. Could be you do it yourself, like a Gusto, QuickBooks, anything like that. You log in and you're putting it in there. And every time you're getting your paycheck, you're doing your payroll taxes. But to go through and amend that, sometimes it's not caught for several years and you've been completely missing the entire strategy behind whoever advised you to do it to begin with. So It's really important to have someone who's being vigilant, making sure whenever you're at, in whichever part, whether it's with employees or self-funded, that you're doing it correctly. So you're actually taking advantage of why someone's recommending you do it.
Yeah, absolutely. One of the biggest things at year end too is, especially solopreneurs, is they'll say, "Oh, by the way, Q4, I want to run my my bonus check just to pay in X thousands of dollars. My CPA says I need to do a cashless pay or whatever. Oh, by the way, I also contributed like $20,000 to my 401k this year. Can we get that on the W-2?" But you only want to run a $20,000 wage in Q4. Now we got to backtrack all the way to Q1, Q2, Q3, reverse those wages, file amendment returns to catch up because it affects the taxable wages. So You have to
Absolutely.
go all the way back. So as you said, to your point, if you are working with the provider, make sure they know that you're making retirement contributions. That way they can record it on payroll and it gets on your W-2 and everything is in compliance.
Yeah, same with the health insurance. If you're taking that 2%
Yes.
deduction, and like you need to be including all of that because it's not tracked then when it does go to your filer at the end of the year or the next year. So super important there. And before we wrap up, let's touch on obviously my favorite kid. So say we'll give my situation. I have a 5-year-old. Do you guys set her up on payroll? How do I reach out and say who helps there? What happens?
Yeah, so we'll do that. We have actually a lot of clients that set up multiple LLCs. We don't necessarily always see if their tax is an S corp. That's more we're taking guidance from the CPA. But let's say you've got one LLC for mom and dad, and then you got another which is an S corp, and then you got another LLC that's a partnership between mom and dad, and it's just an LLC. Well, the S corp is payroll, taxes, all that good stuff. But if you're putting your kids on the LLC payroll and it's a partnership, not taxes and S corp, if they're under 18 years old, you can put them on payroll for actual work, right? You've talked about this a lot with your clients where justifying the work, documenting the work, paying them a certain amount, and you can take those wages that they're earning, and now you can set up a custodial Roth IRA and have those monies transferred into a retirement account up to $7,000 a year. And if you're paying them less than whatever the standard deduction is, it's 15,000 and change, I think. There's no taxes whatsoever. There's no Social Security, no Medicare, no federal, no state. Now, if you pay them under your S corp, then they would be taxable for Social Security, Medicare. So the tax election of being an S corp, you do have to pay attention to those FICA taxes. But if it's a sole prop or a partnership and you hire the kids, they're tax free 100%. So we have a lot of clients that do that. They'll set up multiple LLCs, one for their kids, one for themselves, maybe one for something else. And we love them because it's just multiple entities, more clients for us. It adds to the numbers, but we know the strategy so well and understand it. And my team knows it so well that we do help guide these clients on what that looks like from a payroll perspective. And again, we can just run it as a cashless payroll or have a direct deposit. A lot of times clients will set up their kids and they'll put like $1,000 a month into a savings account. And then maybe they put another $700 or whatever up to the $7,000 limit to an IRA directly into the retirement fund. But then they've got another $1,000 a month that's just in a savings account somewhere. Maybe it's going into an investment account or whatever it is. And then next thing they're like, oh, I can use this money to pay for school supplies or whatever. It's their money. It's the kid's money, right? And it goes into their account. So there's a lot of strategy. And as a business owner, you're taking that as a deduction, as an expense. So if you got that extra cash and you want to lower your personal tax liability and keep stuff within the family, it's a great strategy and a great way to do that.
I completely agree. And I think a lot of people have the misconception that you have to have money to burn or money to invest to actually utilize any of these. But like you said, like whether it's school supplies, camp, your tuition for school, uniforms, whatever that story looks like for you, they can fund that themselves, whether that's you actually making the payments and them knowing it. Like the money that they're working for and the substantiation they're putting to your business can then be used in daily life if you don't have funds to invest in other ways. So I think that's something that everyone should be looking at in their own life if they do have children. Big advocate of that. Well, and you also have a podcast. We'll let you touch on that really quick too. So I've gone to some of your pop-ups, I've gone to your masterminds. They're incredible. But what actually prompted you and what helped me actually get into you run the podcast production-wise that I do here with the Spicy Takes and Tax Breaks. But what prompted you to do those next steps from going into Journey and then going into each of these different branches and then kind of the overall goal? And then why should business owners, whether they're starting new or have been in business 10 years, kind of attack up themselves what that plan is?
Yeah, that's a very good question. As I mentioned early on in this call, I come from an entrepreneurial family. I've always had the entrepreneurial spirit. I don't think that you are what you do. And I think for a long time, I was being defined as one thing. We are individually so much more than how we earn an income, and we can do so many things to make an impact, a positive impact on people. And as I was going through my own entrepreneurial journey of getting Journey Payroll off the ground here in Phoenix, and the ups and downs, the peaks and valleys, and the things that you go through, a lot of times you're kind of on an island and you got to figure things out in order to power through a lot of those situations. So I recognized about a few years ago that how did I even get here in certain rooms that I'm in? How did I even get to the level that I'm at, which is still way below any level that I want to continue to get to. I think there's always another level, but it was all around opportunity. And it was all around pivotal moments. And what do I want to say yes to? And like, avoid the chaos by saying yes to everything, finding alignment and trying to limit that and only focus on the priorities like the payroll business and other things that I wanted to do. And so I developed what I call Flow, which is a mindset framework. And that, what you alluded to with the masterminds and the workshops, I created these to help emerging entrepreneurs go through how to find that alignment in their life, figure out who they are, what they stand for, and where they're going, and then making all decisions on around that so they're not deviating from the path too much. And so I created these workshops to help myself build out the framework and understand it, and also inspire others to know that they're capable of more and put themselves in challenging situations. Along those same lines, me and my co-host Phil, we host the SuccessFlow podcast. We've been doing it for 2.5 years, and it's all around perceptions of success. The way we see it is everyone has their own perception, their own definition of what success looks like to them. And whatever that answer is doesn't matter to me. It only matters to you. And so we want to share as many ideas and frameworks and philosophies that's possible that we learn about, and share that through the podcast and get people's wheels turning to kind of start taking some action and pursuing whatever that perception of success is. And so helping people define that for themselves is really what the podcast is all about. I wrote a newsletter for a couple of years. That was a lot of fun. Just kind of getting thoughts out. And I'll tell you what, if you're not a writer, forcing yourself to write and doing it consistently just opens the door for so much creativity and so many ideas and so much opportunity that I highly encourage writing, whether it's just even like a daily gratitude journal or something, just jotting things down to get them out of your head. Otherwise, it just gets clogged up. Like getting clarity and figuring out the things that you're putting into your mind, and it really translates so well into other areas of what you're doing in your business and your life. So I'm trying to create this whole ecosystem of, it's not just business, it's life, it's personal, it's professional, it's health.
Well, they do.
Approach.
They all interconnect, and people don't look at it that way all the time. And it's incredible. It should be looked at that way. How do people find you?
Yeah, I think if you're happy, healthy, and focused, you're going to be able to do some great things. But yeah, people can find journeypayroll.com is our website. If there's any payroll needs, my email is Stephen with a V, StephenH@journeypayroll.com. The SuccessFlow podcast is my own deal. It's outside of the payroll business. You're not going to get payroll talk. You're going to get more life and philosophical type of fun stuff there. But that's the SuccessFlow podcast. You can catch that anywhere you listen to your podcast. But I thank you so much for having me on. Really appreciate it.
Yeah, absolutely, Stephen. I appreciate you and everything you've done in my journey as well. All your knowledge is great. Also, lastly, Dolphin Podcast is incredible. So if you are not already doing a podcast, but you've been thinking about it, you should check that out as well. Stephen will be on your team for that too. He's incredible there. His team's great. So definitely check that out. And as a reminder, stick around for next week. We will be back with Spicy Takes and Tax Breaks. Again, I'm Aubree Denekamp with the Write-Off Queen and founder of AV Accounting. And we appreciate you. Don't forget to subscribe.